Good evening, everyone. So today's lecture, which is going to be our last lecture on this brief overview and description of our small little series of teaching, is going to be time. And I believe that this is going to be the most important lecture because it's going to really focus and dive deep into how we can use time in trading. Because if you remember, something I asked right in the beginning is which one is more important, price or time? So you answer that question by asking yourself, which one exists with the other without the other one? Can you have price existing without time? Certainly. Well, can you have price existing without time? No, you cannot have price existing without time. Can you have time existing without price? Most certainly. So that makes your price as a more dominant factor. So just to give a brief overview of what we're going to learn in terms of time. So first and foremost important, we're going to speak about the quarterly theory. And the quarterly theory is basically going to be everything that we're going to be talking about mostly in terms of time. And other than that, we're going to just dive a bit deeper into specific times of the day in terms of the sessions, which would focus mostly on how we can split our day sessions into quarters and how we can trade based on marking specific levels in terms of times. More so importantly, the true openings for each session, that is the Asia, London, New York AM, and New York PM. Okay, so let's start with our quarterly theory. So your quarterly theory basically states that everything can be divided into 4 quarters, right? So if I had actually something saved here, if you look at it, if you have a whole year, any year, your whole year is split into 4 quarters, right? And we're going to call those Q1, Q2, Q3, and Q4. And that is going to be the basis of all the time that we're going to be denoting to. So your whole year is divided into 4 quarters, which is your first quarter between January, February, and March. Your second is April, May, June. Third is July, September, October. And then obviously your fourth quarter, which we are in currently right now, is the October, November, and December. Similarly, if you see your NASDAQ, your S&P, your Dow Jones, on all your future indices, they have 4 contracts, which corresponds to all the 4 quarters, the Q1, Q2, Q3. Then inside a year, what do you have? We have a month. So inside your month, your whole month is divided into 4 quarters, which is week 1, week 2, week 3, week 4. Okay. Then we come down even more and we focus on weekly. Your whole week is divided into essentially 4. That is Monday, Tuesday, Wednesday, Thursday, Q1, Q2, Q3, Q4 respectively, accumulation, manipulation, distribution, and X respectively. And as you can see, Friday is separate because it has its own function. And the function of basically Friday is that it has to close the weekly candle, because as I told you, the candle is AMDX, and you have your power of 3 for every candle, that is open, high, low, and close. So that close towards the end to leave a wick is something that Friday does. Then if we dive further from a week's perspective into a daily, something that I'm very much more interested into because I trade based on day-to-day, session-wise. So your whole day is divided into 4 quarters. Q1, Q2, Q3, Q4 again. But this time it's Asia, which is your first quarter, London, that forms your second quarter, New York AM session, which forms your third quarter, and then New York PM session that forms your fourth quarter. So that's essentially how it is. Q1, Q2, Q3, Q4, everything in time. The more from, if you start from like a millennium coming down all the way towards second, everything's divided into 4 quarters. Well, Q1, Q2, Q3, Q4. And this is how we view it. Your Q1 can, so the whole day is either it is an AMDX or XAAMD. Majority of the times, around 90% of the time, your whole day is going to be AMDX. What does that mean? Your Asia is going to accumulate, your London is going to manipulate, your New York's going to distribute, and the New York PM session can either continue from the AM session's distribution or reverse completely based on your higher time frame point of interest. Okay, so what do we have here? AMDX for this daily session. Asia accumulates, London manipulates, New York AM distributes, and New York PM, depending on where the algorithm is trying to go in terms of the higher time frame. And by the higher time frame, I mean the daily or the 4-hourly or the weekly if you're in a Friday, right? And very occasionally, if you're in a very heavy downtrend or heavy uptrend on a Friday, then that's going to continue onto a Monday in the form of an XAMD. So on a Monday, if you have a very strong bearish or bullish conditions going from Friday, and your algorithm hasn't achieved its higher time frame point of interest on that Friday, so your Monday is going to be an XAMD, which would mean that Asia is going to go X, that is most likely continue in the direction of previous Friday's X. Then your London is going to accumulate, which would mean that it's going to be a pretty shitty day for London. Then your New York's going to manipulate, that is the AM session, and then your New York PM session is going to be distributed. So on days like these, it is much more preferably, I would advise to trade the PM session because it would show a very heavy move, right? So this is essentially the quarterly theory in a nutshell. Everything divided into 4 quarters, Q1, Q2, Q3, Q4. Your Q2 and Q3 are tradable because your Q2 is manipulation and your Q3 is distribution. If you've had a good trade in Q2 and Q3, I would advise to avoid the Q4. Always and never trade Q1, which is the accumulation. Again, we're going to focus mostly on this because this is what happens majority of the time. You always let your Q1 go through without touching it, without seeing it, not doing anything. You should be sitting at your charts when Q2 starts. Why? Because that would give you, Q1 would give you a range, and it is only when the accumulation range is broken either from the buy side or from the sell side, which would mean if highs of the accumulation is taken, buy side, buy stop liquidity, buy side liquidity is taken. If the low of the accumulation is taken in Asia, that means that sell side is taken and you're going the exact opposite direction. Okay, let's just move on to the chart. We'll have a better idea. Again, just as I told you, your day can either be an AMDX or XAMD, depending on your higher time frame point of interest. Majority of the time, it's going to always be AMDX, where Q is the measure of time. Okay, so let's study this and then we can go on to the charts. So as you know, your whole day is divided into 24 hours. And if you split your 24 hours into 4 quarters, that would give you what? 6 hours each. So your first 6 hours, we consider that the Asian range starts from the 6 o'clock to 12 o'clock midnight, New York local time. The next 6 hours are dedicated to London session, that is 12 o'clock midnight to 6 a.m. New York start time again. Then the next 6 hours in New York AM session, 6 to 12. Then again, the last 6 hours are, the New York PM session, 12 to 6. And that's your day done and dusted, okay? So if we come here on the chart, this is Friday's chart. And if you can see this at the end, hold on, let it reappear. These boxes in the end. So this is essentially your quarterly theory. And this is called the day's quarterly theory because day was the person, Trader Day came up with this. Again, no affiliations and no promotions, just appreciating him for his work and using his indicator, which is free, by the way. So as you can see, if I draw cyclical lines from 6 o'clock and I put them right here at intervals of 6 hours. So you can see this little, if you can see the blue box underneath, that is what? We have our Q1, right? That is the Asian range, which is again what? Accumulation. We have our Q2, sorry, let me fix this. Q2, which is your manipulation. You have your Q3, which is your distribution. And then you have your Q4, which is your X. And in this case, X was continuation because there's just a small retrace to go back into premium and then it drops down, okay? So the whole point of having this indicator is that you don't have to label everything. So that's a good thing. Let me just erase this. Oh, it erased everything. So again, coming back to here, and you don't even need to draw these to be honest, but this I'm just saying for the sake of simplicity and understanding. So again, we've divided our day into the whole day, that is Friday, into 4 sessions. AMDX, Q1, Q2, Q3, Q4. Asia, London, New York AM, New York PM, right? Now, this is your whole day. If we drop down a bit more and see, so that's 24 hours added together. Now, if you divide these 6 hours by 4, and what do I mean by that? If you divide this lower blue box from 6 to 12 midnight, what do you get? Oops. What do you get here? You get 6 divided by 4, you'll get 90 minutes each. Okay, so what does that mean? If you divide this whole blue box by 4, we get 90 minutes each. As you can see on the bottom left above the trading view icon, you can see 90 minutes. So we can further divide our Q1, Q2, Q3, and Q4 respectively into 4 further segments, which we'll call again Q1, Q2, Q3, Q4, which are 90-minute cycles, small 90-minute cycle of the whole section, all right? So what does that mean? You'll get 90 minutes of each, which will make your Q1 from 6 to 7:30, 7:30 to 9 o'clock, 9 to 10:30, and 10:30 to 12 midnight. So that would divide your whole Asian range, your whole London range, your whole New York AM and New York PM ranges into further 90-minute cycles, which will depict the fact that inside your accumulation range here in Asia, we have further accumulation, manipulation, distribution, and X. Oops. Always get this wrong. There you go. Yeah, so let me just bring the cursor back. So you divide your accumulation, manipulation, distribution, and X into further, 90 minutes. And then you can further break it down into how you want to trade. If you avoid this whole of Q1. I don't know why my cursor, oh, there it is. Yeah. So if you look down, the whole accumulation is divided into 4 90-minute cycle. Sub-accumulation, further sub-manipulation, sub-distribution, and X. The same way for London, which is overall London is always manipulating, but if you divide it into 4 further quarters of 90 minutes, accumulation, manipulation, distribution, and X. Same with New York AM session, 4 quarters, the whole distribution is divided into 4 90-minute cycle, and the X again the same way, with just a small X because mostly our trading ends by 4 o'clock because that's where the New York PM session closes, and you basically don't have any volume, as you can see over here at 4 o'clock. All right. So this is how you further divide everything. Okay. Now, something of very much interest for you to know is that you're, again, as I told before, always to trade quarter 2 and quarter 3. Why? Because all of your kill zones are inside your quarter 2 and quarter 3. And I'm going to talk about the kill zones further on. Another reason why you should always be trading your quarter 2 and quarter 3, which is because your quarter 2 is manipulation, quarter 3 is distribution. So you would much rather trade that than this small little accumulation. And another reason why you shouldn't be trading quarter 1 is because your quarter 1 will tell you the whole story for the day. How I so? Because if quarter 1 is accumulation, you will know that for the next day, the next whole of the sessions, London's going to manipulate, that is M, New York's going to distribute, that is D, and PM session is going to be either reversal or continuation based on whether the higher time frame objective is being met and in which particular direction it is being met. So obviously, much more favorable to trade quarter 2 manipulation, quarter 3 distribution, with the help of quarter 1, which will show you either the day is X or it is A. Okay, and also over here in quarter 1, you will have a particular range formed. Highs will be formed and lows will be formed. And in this case, if you see your low has been taken, in quarter 2, your low has been taken from Asia. So you long it, and there you go. That's your manipulation. Then we come down to Quarter number 3, you have a high formed, you have a low formed. There you go. Equities open at 9:30, takes these highs, these short-term highs on London session, and what does it do? Straight up distributes down completely towards a higher time frame point of interest. And what is your higher time frame point of interest? There you go. It is this low on the 6th of August, Friday, 6th of August, 2023. And what is below these low? Sell side liquidity. Objective for the week met. Okay. So this is how essentially you can break everything down into 4 quarters, your whole day. And you can trade using that. You can obviously do it on a higher time frame as well. It's a pretty heavy, indicator, so it takes a lot of time. So you can have settings where you can literally do it for the week and for the month as well. If I add that, it'll give you a broader idea. And if why is this not increasing? So see, if you look at it from a month's perspective, and if I go on a higher time frame, you'll get a much better idea. I'd rather go on a 4. Yeah. So if you see this whole on the month, look at this from our October, perfect depiction. If we just take this here, these lines, oops, sorry, wrong line. If we take this line from this October 1st accumulation and we draw it here, there you go. Our whole month is divided into 4 quarters. And look at how perfect it is. In quarter number 1 accumulation, prices accumulating. See, all of this is accumulating. As soon as Q2 starts manipulating towards the upside. And as soon as Q2 finishes, price just goes up, retraces, goes into premium, and just starts dropping. And on the 22nd of October, your distribution is finished. Now we're going to go into X. So X can either be at this further drop down, that is continuation, or it can have a retrace up into fair value gap, fair value gap, fair value gap before it thumps down again. And that's exactly what it's going to do, because you have these lows that have not been traded to, you have these lows that have not been traded to. And what is underneath these lows? Sell side liquidity. So this is just another depiction of how you can use your quarterly theory and your cycles on a higher time frame. But obviously, personally, I am only concerned with the lower time frame. So I only trade day by day. So my Q1, Q2, Q3, Q4 are just, Asia, London, New York, AM and PM. So I tend to not have the monthly and weekly on, just the daily, to show me that the day, again, to repeat, is comprising of 4 quarters. Asia, London, New York, and New York. Q1, Q2, Q3, Q4, AMD, X. That's it. In terms of time and how the day is distributed, this is all you need to know. What comes a bit more specific is how inside this session, whether you choose to trade Asia, which again you shouldn't, which particular time in that session, inside that session, would you keep as a marker in terms of time and trade and use that time as a pivot. Again, for London, what time would be the best to trade inside London? What time would be the best to trade inside New York AM? And what time would it be best to trade inside the PM session? That's where the Q2 and Q3 of the 90 minutes inside the session comes into play. So there's something that I like to talk about, that is the true openings for the session. So if I can refer back to this, we come here. If you see here, it says true opens. So the true opens are always the beginning of the Q2 of every cycle. What does that mean? If we come to Asia and we do this, what is our Q2? Inside Asia, always remember that the whole of Asia is always accumulation. But inside that 6 hours, when you divide it by 4, you get further 90-minute cycles. So inside these cycles, your Q2, that is right here, 7:30, is the opening of 7:30 in the Asia session. That is the opening of Q2. If you draw a line through this, this right here. This is going to be your pivot point. Why? Because this is going to be the true open of Asia session. Price above this, premium, short it. Price below this, discount, long it. And this is something you can literally see for yourself right here. 7:30 candle right here. What does price do? Come down, go up. When it goes up, what does it do? You're in a premium now. You short it, it comes down, takes down these lows of Asia's, which is what? Sell side liquidity. When sell side liquidity is taken up, what's going to happen? You're in a premium. You're underneath the true open for Asia. You're going to go long, and that's exactly what's happening. If we move on and go towards the Q2 for the day, that is London, and we go into our 90-minute cycle, where is our true opening for London? That is 1:30. So 1:30 over here, we place this here. Again, the same concept applies. In Q2, that is your manipulation. Hold on, I lost my cursor again. Manipulation starts. Price comes down to manipulate completely downwards. You're underneath the true open, that is 1:30 for London. Price goes up, retraces down. Perfectly, when your distribution starts, price starts distributing up. That's it. That's your single trade in London, which is worth how much? Let's see. Let's close our magnet first. So based on this simple knowledge of time and true opens and the quarterly theory, if you grab your trade from here and you trade all the way here, that's 300 ticks, more than enough for me. And how do we enter? Again, using our fibs that I had taught. Oops, wrong fib. Let's grab this one. Perfect fill on 236. Underneath the true open, that is the 1:30 a.m. in a discount, we have taken these Asia lows. All of our confluences are met. And what do? We go up straight. That's your first trade of the day, done and dusted, right? Now we come to London, which is the most heaviest one. So again, the same concept applies. What is the true opening of the New York session? Sorry, what is the true opening of the New York session? That would be the Q2, the time of Q2, or the 90 minutes cycle, that is 7:30. We mark that. Look at what price does. Comes down. You can long it. Okay, I wouldn't, to be honest, because it didn't take out the London lows. I'll wait. What does it do? Goes up, 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 up. Takes out this short-term London high. Does not take out this intermediate-term London high. It doesn't matter. It's taken down a short-term London high. And you look at this, it enters a 5-minute fair value gap. You are above the true New York open, AM session open, that is 7:30 in the morning. And then look at what price does. And if you look at it, right where the distribution in the New York session starts, price first amps up to go to a premium. And then look at it. Throughout this 90 minutes, what does it do? Completely comes down. Look at this right here. Giving you what? 890 ticks, yeah? More than enough money for me for like a whole 6 months, to be honest, if you play your cards right and have the right amount of contracts. Anyhow, that's not the point. The point is to have fun and not earn. Yeah. Then you have your fourth cycle, carrying on to the PM session. Again, where would your true open be for the New York PM session? The second quarter of the 90-minute cycle, that is 1:30 p.m. Again, you draw your line through here and look at what price does. Again, just slight retrace up and then just drops down. And what does it drop down to? It takes down the New York AM session's low. There you go. So what I'm trying to say in a nutshell is, if you're trading a day-to-day, session-to-session, you literally just have to look at the session high and low. Look at what's happening here. The London comes, takes Asia low, goes up, takes Asia high, then comes down. The London tries to take its own low, doesn't happen. Sorry, New York tries to take the London low, doesn't happen. Goes up, takes the London high, comes down. There you go. In the PM session, you retrace up to go into a premium. You go above the 1:30 true PM session open, and then you just come down to take what? Sell side liquidity in the form of what? New York lows. Simple as that. And there's no sugarcoating all of this time, since time is basically a construct and it stays constant. It is literally this is it. You have to memorize this one time, and you just need to know it never changes. Your true openings never changes, right? So I will just use this to write it down here in case anyone wants to screenshot or something. And always remember, these are called true PM session open, or rather true opens. You go here, this is your true AM open. True AM open. Again, we go to the quarter 2 of the London, not the quarter 2 of the day, the quarter 2 of the London cycle. The quarter 2 of the day would be this whole London. You have to remember that. So where do you have that? That's 130. So we come here. And this is true London open. And yeah, if you want to do Asia as well, that's fine. Obviously, it's like no need to do Asia. But yeah, that's 730. True Asia open. So yeah, this is essentially it. And you can see these true opens tell you where price is, whether we're at a premium, we're at a discount. If you're at a premium, we short it. If you're at a discount, we long it. And obviously, if you're at a, what do you call it? If you're in a premium, if you're in manipulation, you're coming down to a premium. Discount in this case. My bad. Yeah, so if you come down to a discount, see, 3 o'clock, distribution is starting. You're underneath the true London open. You're in a very heavy discount. Price has gone up to retrace down. And as soon as your distribution cycle starts in the London session, look at what price does. Starts amping up. And as soon as your X starts in the London session, price reverses down. Again, London, New York AM session comes. Look at this accumulation. Perfect accumulation. Price goes up to go into a premium because we're in a Q2 of the New York AM session, that is manipulation. So price comes down. We're in a discount for distribution, but we have to go to a premium. Again, price drops down in the whole distribution section. And over here, when X starts, you have your slight retracement or reversal up. Again, your PM session comes, accumulation starts to manipulate towards the downside, and then even distributes to the downside. Why? Because the algorithm is in a hurry to complete its higher time frame point of interest, because it's a Friday. And this whole thing is just on a loop every single day. It's not just this day, it's literally every single day. So yeah, it can be a bit confusing, but to be honest, you can just memorize this. Everything's in 4 quarters. Your year is divided into 4 quarters. Your month is in 4 quarters. Your week is in 4 quarters. And your day is in 4 quarters. The only thing different is that in a day, rather than 1, 2, 3, 4, like June, July, you literally have Asia, London, New York AM, New York PM, and that's what you trade into. And then you're literally given true opens of every session, because every session is divided into 4 further 90-minute cycles. And inside the second quarter, where your manipulation is starting, the moment it starts, that time is your true opening. If you're above the true opening, you short it. If you're below the true opening, you long it. That is literally the case every single day. We can do the same thing back tested right now. Again, see, we let Asia do its thing. We don't touch Asia. That's the first quarter of the day done. Then you come to the London session. What do we have here? Where's your quarter 2? Where's your 130 rather? Right here. Look at what price does. London starts, it accumulates. When then you have your true opening starts. Price goes above the true opening. It manipulates up. As soon as distribution starts, what does it do? Comes right back down. What does it do? Takes Asia's low. And then what does it do once it takes Asia's low? In X, it starts reversing, goes towards the upside. Simple. You do the same thing You bring it over here in New York session, and it's literally doing the same thing. It accumulates and then it starts manipulating above the true opening, and then it starts to distribute underneath the true opening, and then you start having the same thing again. Since what do you call it, Thursday was a very shitty day, to be honest. So yeah, this whole week was a bit weird, but yeah, Friday was really amazing. And yeah, the same thing is just on repeat again and again and again, and you can take every single day and backtest it. Sorry, you can take any single day and backtest it, and you're going to have the same answer again and again. 4 quarters, 4 sessions. Each session is divided into 4 sub-sessions or 90-minute cycles. And inside those 90-minute cycle, the start of your Q2 is always going to be your true opening. And again, above the true opening short, below the true opening long. If you're below the true opening and you've taken the previous session's low, such as again over here. Why does my cursor not? Yeah. Again, you see true opening at 130. It comes underneath 130. You're in a premium. You've taken down the Asia's lows. Price goes up to take Asia's high. Again, comes down. And what does it do? It manipulates towards the upside. Takes Asia's high. We're in a premium. We drop down in a distribution phase in the London cycle to take what? Its own lows. Again, you come down to New York. Look at this. Your true opening is 730. You just go a bit above the true opening. Starts to manipulate down, down, down. And what does it do? Where does it manipulate down to? If you zoom out, look at this. Perfect. It takes the previous week's London session lows, which it had not taken. So it just comes down for it, takes that perfectly inside the middle of the distribution, starts going up. And in X, you have a continuation. Then you move on towards the PM session, and the PM session literally does the same thing. So this thing is on constant repeat. And that is why I would deem this teaching session the most important one, because this is literally how you trade price action and time. And without time, without knowing how your whole day is divided into quarters, your whole quarters are further divided into sub quarters, and you have true openings. Personally, I would be lost, and this is how I found my trading way, and it made it really, really, really easy for me because I had a very set thing to look at when I open my charts. Which time of the day are we in? Am I in Asia? Okay, I'm gonna close it, go about my day, do my thing. Come London, if I'm busy, I'm busy. I don't need to trade it. I come back to New York AM session. Okay, what has London done? Made its high and the lows. Has London taken out Asia's highs or lows? Yes, no. Okay, we'll see. What has London done? And what are we doing on the higher time frame? And where is the algorithm trying to reach? Is it trying to reach for lows, taking out sell side? Is it trying to reach for highs, taking out buy side? And based on that, I'll take my New York session trade. And to be honest, you don't even need to do that. If in the New York AM session takes your London highs, you just take a short till London lows, and that'll, in majority of the instances, honestly be a lot of money. Let's see. Let's have an example here. So you see, this is all of your London. You have your London high and your London low. Once your New York comes, it takes the London lows, and it even takes the previous London lows right here, right? And let's say you get in over here, somewhere over here, and you long it. And where do I want my target to be? Right here, these London highs. So what did I do? I got 916 ticks in the New York AM session by doing what? Simply trading inside the day session to session liquidity. I waited for New York to take down London lows. I longed it towards London highs, and I got a 916 ticks. And you can do the same thing if you want to trade London. Look at this purple box or pink or whatever this is. You have price, you have the London session opens, comes down the Asia low, which is what? Sell side liquidity. You long it till what? Asia high. What do you get? You long it from here, you get what? 140 ticks, more than enough. You take it down Asia highs in London, and what do you target? If you take down if you take down Asia's high, what would you target? Because Asia's lows have already been taken. So I will just go towards the left side and see the closest liquidity, and this right here is something that catches my mind. Right here catches my eye, sorry. So I will target this simply. And what do I get? I get 364 ticks. And again, come New York session, drops down, and again I showed you the same thing, 916 ticks. And you can keep on doing this again and again, to be honest. London lows, Asia. You have Asia. Oh, why does this cursor keep on disappearing? It's so annoying. Asia lows taken, long it to any structure. Price drops. Oh yeah, this was that shitty day on Wednesday, I think. God bless whoever traded Wednesday, to be honest, because I didn't. So anyhow, you have Asia low, perfect example. London takes out Asia low, you long it till where? Asia high, right here. What happens then? New York comes in, makes this high, takes out London highs, short it, again, goes up. New York AM session takes its own highs, PM session starts. What do? Short it till New York AM session lows. Simple. And you can keep on doing this only if you have the knowledge of your quarter, how your day is divided into quarters, and your true openings. That's it. You combine this with your knowledge of open, high, low, close, your general structure idea. If you know how to depict structure, you know how to use your order blocks, and you know how to use your fair value gaps, and that's it. You take your trade based on your fibs, and that's pretty much it, to be honest. That's all you need to trade. You don't need anything fancy, whatever. You can always have added confluences, but your main confluence should always be the time of the day, whether I'm in Q1, 2, 3, or 4. I'm never going to trade Q1, and I will focus on Q2 and Q3. If I miss Q2, that's okay. I'll have a general idea of where price is going, whether it's going to distribute to the side opposite to the Q2, that is manipulation, or is going to take it towards that direction based on my higher time frame points of interest. The other thing you need is open, high, low, close, and your liquidity. Is price going to take buy side liquidity or sell side liquidity? If it takes sell side liquidity right here, sell side liquidity is taken, you long it towards where? Buy side liquidity. And the same thing, buy side liquidity is taken from here, I short it where? Till sell side liquidity. What happens again? Price goes up, takes buy side liquidity, I will short it till where? Sell side liquidity. And this is how you can literally trade the whole day again and again, as long as you have an idea of your higher time frame point of interest. Because if your higher time frame point of interest on the day's perspective or the 4 hours perspective is showing that price is bearish, I would inside the session Q2, Q3, New York and London, or rather London and New York respectively, I would be preferring to take shorts. I wouldn't take a trade against the trend. If my daily perspective is showing that the algorithm wants to pull price up, go bullish, I would much rather fancy going long, whether that long is coming in a manipulation phase or it's coming in a distribution phase. And that pretty much sums up everything, to be honest. That's all there is about time. And this is all there is about time, to be honest. That's it. This is all you need. And your primary focus should be on here. This should be your primary focus. And this should be your primary focus. That's it. This is a very crude example. Again, you see Q1 accumulates, then price starts going up, because Q2 is manipulation. It manipulates all the way towards a higher time frame PD array, that is premium discount array. And what happens? And look how Q2 true open is marked. That is London, or rather, yeah, the Q2 is marked. This can be for any London, New York, Asia, but the Q2 pulls price up, manipulates into a higher time frame PD array, and then Q3 just straight up drops it, and Q4 continues it, right? So you can do that trade session by session, or what you could do is if you want to hold your trade into a next session, that's something you can do as well, because you can then trade solely based on the day. You can consider this whole an accumulation, then this whole as a manipulation up, and then you can write this whole distribution down rather than just trading a single session. What do I mean by that? If you look at this high is formed in London. You can take a trade here from London and you can go all the way towards the end of the day in New York PM session. In that case, you wouldn't have to worry about, what do you call it? You would just remove this. Yeah, so this is how you would trade the whole day. If you want to hold the trades and you don't want to trade structure by structure, session by session, which I wouldn't recommend, to be honest, unless you're very, very sure that a higher time frame point of interest is going to be met, such as on Friday. So if you hold a trade, if you short here, which is like the end of manipulation, see, this whole manipulation starts, price comes into a discount, price goes up, you've manipulated up, you're in a premium, you shorted from here, and now when you short it, you know what your target is. That is these lows, which is what? Sell side liquidity. So you come and you hold it for that duration. You hold it throughout the distribution. And despite the fact that you're a small little reversal here, or rather retracement, you know that 12 o'clock is where the, what do you call it, retracement, the X starts, but it can either be reversal or continuation. And to be honest, many people would see this leg as a reversal. But since you know that price has not met that objective yet, it has not met the objective. This objective was not met. And funnily, this is something I'd actually want to show everyone. What is the low on this candle? 14,660, right? Even. What is this? Or rather here. 14,671. So see, price did not take that low by 25 cents and then started going up. And since you know that it's Friday towards the end of the week, price has to, the algorithm has to complete its higher time frame point of interest. But the fact that it missed this low, missed that other low by 25 cents, and it started going up in Q4, this is just a retracement before price comes down. And that is why you need to trade just the sessions of the day. And that is why you need this 90-minute cycle. Why? Because see, if you know this is a retracement and you want to take a short again, where would you take that short? And how, at what particular time? Look at this, from 12 o'clock to 1:30, pure accumulation. At 1:30, you have your open, and look at what price does in the manipulation. Completely starts going down, and you would know to take the trade here because you know that this is your retracement has been completed and the price is above the 1:30 true open. And then it starts just manipulating down, and then it starts distributing down until it meets this higher time frame point of interest. That is this daily low. And that's it. That's literally how you use your time to trade. And this brings me back to my point that all you need is time and price. All you need is what? Time and price. Price in the form of structure, open, high, low, and close, and time in the form of your 4 quarters of the day and 4 quarters of your section, your sessions of Asia, London, New York AM, and New York PM, and your true opens. You combine that with open, high, low, close. You combine that with your order blocks, fair value gaps, plus your Fibonacci extensions to enter into a trade. And that's literally all of your framework that you're ever going to need to trade. And that pretty much brings our session to an end. And I hope you guys learned something insight. What do you call it? My tongue is slipping. I hope you guys learned something good today, because I personally, when I first started learning about time, it was a mind-blowing experience, and it was just a complete eye-opener, because I could finally rely on something constant, that is time, to depict my trades and to actually take trades. So it's really a game changer, to be honest. And I would really advise you guys to study over this more than what I've taught. Dig deeper into it yourself. And as always, if you have any questions, more than welcome to come and ask. And thank you so much.